The European Central Bank lowering its inflation and growth forecast for the Eurozone, according to a press conference Thursday following its September meeting. For analysis, let's get straight to Angus Campbell, a senior analyst at FxPro, with me now from London. All right, Angus, glad to have you with us. So lower inflation, lower growth forecasts, a pretty dovish tone, right?
Yeah, I think that it was more dovish than one would expect, actually. You know, a lot of people sort of were expecting him to hold that dovish stance. He's, continued to maintain that. But really, I think that he made it very clear, he was very consistent in saying that whilst the economic recovery is expected to continue, it is going to be quite a bit slower than previously thought. So little surprise in lowering inflation expectations 2 years out, growth expectations as well. But I think that investors were maybe just taken aback by just how sort of soft his stance was, how dovish he really was. So when you look at the figures, those forecasts, 1.7% for inflation in 2017, that's after they're meant to stop the QE program in a year's time. And that's still some way off the 2% target.
Right.
So I guess what that's telling us is that QE is probably here to stay beyond September 2016.
Right, and I want to ask you about that QE program because Mario Draghi also announcing an increase in the portion of bonds it can buy. Now, it's about 6 months into that QE program, and like you mentioned, has another year left. Your reaction to this development?
Yeah, sure. I mean, what he's always been consistent in saying is that these programs can be changed, they can be adjusted, the assets that they look to purchase can always, differ. And they may look to sort of tweak things a little bit in order to maintain that stimulus going into the economy, the Eurozone economy. And of course, what he's having to contend with now is the much lower commodity prices, which I think have taken even the best analysts and economists by surprise. A much slower China growth in prospect and rapidly slowing emerging economies. So all these factors have made him sort of become more flexible, and that has caused the euro to soften quite a bit.
Although they continue to refer to those declines in commodity prices as transitory. But I want to switch gears now and talk about the U.S. Federal Reserve. Of course, the ECB meeting comes just 2 weeks before the Fed's closely watched September meeting. Of course, we have the jobs numbers in the U.S. on Friday. And if there's anything we learned from the Fed gathering in Jackson Hole over the past weekend is that Fed officials are torn over whether to raise rates in September or not.
Yeah, I think that, you would, if you put 10 people in a room, you'd probably have 5 saying they should raise rate, 5 saying they should keep rates on hold. It's a very, very tricky balancing act to perform because whilst the Federal Reserve has been consistent throughout this year in sort of citing those risks from Asia, I think that now that the financial markets have realised their concerns over the slowing Chinese economy, that the recent snapback correction in equity markets has taken a lot of people by surprise. And so it's probably pushed more people on the Federal Reserve into the dovish camp, and certainly those hawks have become maybe a little bit more dovish. So I think that certainly here at FxPro we've been pretty consistent in saying that we don't see a rate hike from the Federal Reserve, certainly this month, not at all, and possibly not even in 2015.
All right, Angus, we're out of time.
It's possibly December.
All right, Angus Campbell, we'll leave it there. A senior analyst at FxPro, thanks very much for joining us.
Pleasure.
I'm Scott Gam, and you're watching The Street.